If you're holding XRP, HBAR, or XLM right now, and you've been watching those red candles stack up over the past few days with a sick feeling in your stomach, I get it. I'm in all three of these coins, and I'm not selling. Not because I'm blindly hoping for a moon, not because I'm in denial, but because I'm looking at a very specific picture right now, and today, I'm going to walk you through everything, honestly, clearly, no hype. Just facts and logic. What is actually happening in the market right now? The last several days have been brutal across the board. XRP has dropped from $1.33 at the end of May down to around $1.08 today. That's nearly a 20% pullback in just over a week. HBAR is sitting at approximately $0.08, down almost 20% over the past 7 days. XLM is trading around $0.19, and it's also losing ground. None of these moves feel good when you're watching your portfolio. But here's the thing you have to understand. First, this is not a collapse specific to XRP or HBAR or XLM. This is a broad market sell-off. Bitcoin is dragging everything down, exactly like it always does. When BTC sneezes, altcoins catch pneumonia. That's not a new phenomenon. It happened in 2018, in 2020, in 2022, and it's happening right now in 2026. But here's where it gets interesting. If you look at the derivatives data for XRP right now, you'll see something almost theatrical. Short positions are outnumbering long positions 9-1. 9-1. That means traders have absolutely piled into bets that XRP keeps falling. And you know what historically happens when everyone positions to one side of the trade? The market goes the other direction. That mechanism is called a short squeeze, and XRP has a very well-documented history of violent, fast recoveries that obliterate short positions. We've seen it before. The setup is there again. But let's not get ahead of ourselves. Let's go coin by coin. XRP is currently trading around $1.08. At the end of May, it was $1.33. That's a significant drop in a short period of time, and I want to talk about why I'm not panicking. The $1 to $1.10 zone is a historically strong support area for XRP. This isn't a random number, it's a psychological level, and it's backed up by serious technical support. The market has tested this zone multiple times over the past several months, and buyers have consistently shown up here. Now let's talk fundamentals. What is actually happening with Ripple as a company? First, they are not slowing down. Partnerships with financial institutions across the world continue to expand. RLUSD, Ripple's own stablecoin, is gaining volume and traction. Second, and this is critical, the Clarity Act is actively being discussed in the United States Congress. This legislation is designed to give cryptocurrency assets clear regulatory classification. XRP is in the best position of all three coins here. Ripple fought the SEC in court, partially won, and has spent years preparing for exactly this regulatory clarity. When it arrives and the probability is real, XRP will benefit more directly than almost any other asset in this space. Add to that the 9-1 short ratio, and you have the ingredients for a rapid upward move that catches most traders completely off guard. The nearest resistance levels to watch are $1.30, then $1.50, and then $1.73. Those are realistic targets in a recovery scenario, not fantasy numbers. Now let's talk about HBAR. And I want to be straightforward with you here. This is the coin that the market simply does not understand yet. It's sitting at around $0.08, which is roughly where it's been trading for most of the past year, despite the fact that Hedera as a technology and as an organization has been making enormous progress. The market capitalization of HBAR right now is approximately $3.4 billion. XRP's market cap is around $65 billion. Now think about that. If HBAR ever receives even a fraction of the institutional recognition that XRP has, we're talking about multipliers, not percentages. That's not hype, that's basic math. So what exactly is Hedera? This is not just another blockchain. Hedera Hashgraph uses a fundamentally different technology, a directed acyclic graph instead of a traditional chain of blocks. The result is processing capacity of over 10,000 transactions per second, with finality in 3 to 5 seconds, and fees measured in fractions of a cent. For enterprise use cases, that's a very compelling combination. And here's the part that really matters. Hedera is governed by a council that includes Google, IBM, Boeing, LG, Deutsche Telekom, Ubisoft, and dozens of other world-class corporations. This is not an anonymous startup with a white paper and a Discord server. This is corporate infrastructure, built and operated by companies you've heard of and trust. Right now, HBAR is in what technical analysts would describe as an accumulation phase. The range between $0.07 and $0.09 represents strong historical support. Smart money institutional buyers accumulates quietly at the bottom, while retail investors are panicking. That's exactly what the chart looks like right now. The forecast for June 2026 puts HBAR in a range between $0.08 and $0.11, with July potentially reaching $0.14 to $0.15 as momentum builds. HBAR is the slowest of the three in terms of market recognition. But that's precisely what makes it the highest asymmetric opportunity in this group. Stellar Lumens XLM. This coin gets mentioned alongside XRP almost reflexively, and there's a real reason for that. Stellar was created by Jed McCaleb, one of the original co-founders of Ripple, after he departed from the project. In some ways, XLM is the people's version of XRP, the same core idea of fast, cheap payment rails, but oriented toward individuals rather than banks. Right now, XLM is trading around $0.19. It's also pulling back with the broader market. The nearest significant support sits around the $0.136 to $0.139 zone. If the market continues lower, that level will be tested. But from a fundamental perspective, here's what's compelling about Stellar. The network is actively moving into real-world asset tokenization (RWA). This is one of the hottest narratives in the entire crypto space right now. Tokenizing stocks, bonds, real estate, funds, all of it requires fast and cheap payment infrastructure. Stellar is exceptionally well positioned for that role. On top of that, the Stellar Development Foundation is doing real work in developing markets, Africa, Latin America, Southeast Asia. In regions where traditional banking infrastructure is weak or non-existent, Stellar is already functioning as a practical financial tool for real people. That's not a white paper promise. That's happening. XLM has the most conservative risk-to-reward profile of the three. It won't move as violently as XRP in a short squeeze scenario. But for someone who wants exposure to the payment layer crypto sector without maximum volatility, it's a thoughtful position. This is a question worth addressing directly. If these projects are fundamentally strong, why are they all dropping at the same time? The first reason is Bitcoin correlation. The crypto market in 2026 is still highly correlated. When BTC goes down, altcoins go down faster and harder. This is not a sign of weakness in any specific project. It's the structure of the market. The second reason is the macro environment. Global financial conditions in 2026 are complex. Interest rates, inflation, geopolitical uncertainty, all of it affects risk appetite. Cryptocurrency is classified as a risk-on asset. When uncertainty rises, money moves to cash and stablecoins. The third reason, and this one matters specifically for these three coins, is that regulatory clarity has not fully arrived yet. The Clarity Act is being discussed but has not passed. Until that definitive signal comes, large institutional capital is sitting on the sidelines. They're watching. They're waiting. Now here's the context that ties all three coins together. XRP, HBAR, and XLM are all part of what's called the ISO 20022 ecosystem. ISO 20022 is the new global standard for financial messaging, the protocol that banks and payment networks worldwide are transitioning to right now. These three coins are technically compatible with that standard. That's not a guarantee of price performance, but it is a durable structural narrative that isn't going anywhere. Three scenarios for what happens next. Let me lay out three honest scenarios. The positive scenario. The Clarity Act passes in the coming months. Regulatory clarity arrives for crypto broadly. Short positions on XRP begin closing rapidly, triggering a short squeeze. Bitcoin recovers above $70,000. In this environment, XRP could realistically return to $1.50 and press toward $1.73. HBAR breaks out of accumulation and moves towards $0.15 to $0.20. XLM recovers back above $0.25. The neutral scenario. The market grinds sideways. No major catalysts in either direction. XRP consolidates in the $1 to $1.30 range. HBAR holds between $0.07 and $0.10. XLM stays between $0.15 and $0.20. Boring, but no significant damage. The negative scenario. Macro conditions deteriorate. Bitcoin breaks below key support levels and drags everything with it. XRP could revisit $0.85 to $0.90. HBAR could test $0.05 to $0.06. XLM could fall towards $0.10 to $0.12. This is painful, but it's not the end. It becomes an accumulation opportunity for anyone holding cash. I don't consider the third scenario the most likely outcome, but you need to know your levels, and you need to be psychologically prepared for every possibility. Enough theory. What do you do? Number 1, don't panic. Sell at a loss for no reason. If you bought XRP at $2 and it's now at $1.08, selling today simply locks in that loss. The market doesn't know where you bought. It doesn't owe you a recovery on your timeline. But historically, patience in crypto pays. Number 2, if you have available cash, this is the environment to look at dollar cost averaging. DCA means you don't put everything in at once. You buy small amounts at each support level. This brings down your average entry price and removes emotion from the equation. Number 3, watch the volume. When price drops on low volume, it's a weak move the market is just drifting. When you start seeing large green candles paired with high volume, that's the signal that institutional buyers are starting to move in. Number 4, set clear invalidation levels for yourself. For XRP, a daily close below $0.95 changes the picture. For HBAR, $0.06 is the critical line. For XLM, 0,2. Below those levels, the thesis needs to be reassessed. Above them, we are in a normal correction. Number 5, manage your emotional exposure. Don't hold 100% of your portfolio in one coin. Spreading across XRP, HBAR, and XLM is already diversification within the payment layer sector. That's a valid approach, and it reduces the emotional impact of any single coin moving against you. Why I'm holding all three and not selling. I want to be completely transparent. I hold XRP, HBAR, and XLM. I see the red numbers every day. It doesn't feel good. It never does for anyone. But when I look at the fundamentals, the technology, and the real-world adoption happening across all three networks, I don't see a reason to exit. XRP is real partnerships with real banks, real transactions, a real legal precedent. Ripple as a company is not shrinking, it's growing. HBAR is enterprise-grade infrastructure with Google as a governing council member. Not just a partnership announcement for a press release, actual structural corporate involvement in running the network. XLM is real financial inclusion. Billions of people around the world still don't have access to basic banking services. Stellar is solving that problem today, not in some future roadmap. A price drop is not a project collapse. These are not the same thing. Price drops create opportunity for people who understand what they're holding. Crypto is not for the faint-hearted. This market tests you psychologically every single day. People who sell at the bottom out of fear, those people are the ones who later watch the coin they sold run back up without them. Smart money buys when others are panicking. That's not a cliche, it's literally how wealth transfers in volatile markets. I'm not telling you to buy right now. I'm not telling you to hold at any cost. I'm telling you one thing. Make your decisions based on analysis, not emotions. Look at the fundamentals. Look at the levels. Look at the volume. The biggest gains in crypto have always gone to the people who held through the scariest moments. XRP at 1,08. HBAR at 0.0.0 baht. XLM at 0,19. I'm still in. Let's see where this goes. If this video gave you value, subscribe and hit the like button. It genuinely helps the channel grow and lets me keep making content like this. Drop a comment below. Are you holding or did you sell? I want to know what our community is thinking. See you in the next one.